Good morning, everybody. October 5th. I'm going to do a quick market update. We're going to jump right into the chart this morning to do kind of a follow-up on our video from last month. So this up here probably looks familiar if you watched the video last month. So we were really focusing on this wedge and which way the market was going to break out of it. When we did the update last month, we were right about there, right in the middle of the wedge. And we know that whatever direction a stock or a market breaks out of a wedge, there's usually follow through to that move one way or the other, up or down. So you can see that a couple days later, we broke down through the wedge and we had a pretty significant follow through down. That's going to be right about a 5.5% or so move in 2 weeks. That's a good solid move downwards. So where do we sit now? Let me bring up a different longer term view. So this is a longer term view of that exact same chart. Now it gets kind of messy with all the different stuff. So this is the wedge we just looked at. This is the breakdown. This bigger wedge is a structure from earlier in the year, where this is actually technically called an ascending wedge because one line's slanted, one line is straight. Breakouts out of a pattern like this also tend to be fairly strong afterwards. You can see that this exact same thing happened. We kind of bounced around, eventually broke out to the upside, had a nice big follow through to the upside in the 10% range over a couple months. And we've given most of that back now, unfortunately. But the question is, what happens from here? So a couple things are working in our favor, but also a couple things need to happen, or the market could see a bit of weakness, maybe for a longer period of time going forward. So two things. One is we're still trending along this longer term trend line moving higher. We haven't broken that yet. Which is good. As long as if we don't break that, that's going to be a very positive thing. If we don't break this, if this trend line holds, we likely get back to all-time highs, or at least highs for this year. Also, the blue line's the 200-day moving average. That tends to lend pretty solid support for a stock that's coming back to it as well. We like to buy stocks near their 200-day moving average because a lot of times it bounces off. So we have a trend line that's strong, that's been established for a while. We also have the 200-day moving average right around that area too. So there's a lot of support, really right around where we're at right now. Along with, we're going into a seasonally very strong part of the year. October, November, December tend to be really strong months in the year, following the August, September, which tend to be the worst months. So we have seasonality on our side, we have a trend line, we also have a moving average. So there's things that are lining up that that should have the market bounce and start recovering back higher. That being said, if it doesn't, if it breaks through those pretty strong support areas, it's likely that we see some more weakness for a while. That's going to be a very negative sign of the market. Market's not going to like that. So we'll likely be pretty weak for a month or two. Don't think that's going to happen, but it definitely can happen. We'll be watching it, obviously. But that's kind of where we're at, just big picture wise. A couple other things, individual stock wise, that we're looking at. So Apple, this is Apple. It's also near its 200-day moving average. It's starting to bounce off it a little bit. So Apple is a big part of the overall market, 7% of the S&P. So if Apple bounces, a lot of times, whatever direction the market's going, Apple's going too, or vice versa. Whatever direction Apple's going, the overall market tends to go as well. It's a big part of the overall market. So we like to see this near kind of a bounce level. We also, if you look down here, this is the MACD indicator, moving average convergence divergence. We're looking for crossing lines here. If we see the blue line cross up through the orange line, that's also a strong indicator of a trend reversal. So downtrend reversing into an uptrend. You can see like back here when it happened, trend reversed immediately. You can see back here when it happened, same thing. You can see back here when it happened, same thing. So we're looking for this to continue bouncing or crossing through that orange line. That'll again be one more indicator of we're probably looking for, or probably in the time frame of a bounce, and that'll hopefully drag the rest of the market up with it. Lastly, I'll show you Tesla. So Tesla's got a couple different wedge patterns going on right now too. You can see that the previous one was more of a kind of a downward sloping wedge. That one broke out to the upside, had really good follow through to the upside. We're right back in another wedge now too, and we're going to get this resolved within a month for sure, one way or the other. So the way also we can kind of get an idea of which way a wedge might break out. Something like 65% of the time, the wedge breakout is the same direction as the stock was going when it entered the wedge. So this one entered the wedge going higher, so it's more likely that this one breaks out to the high side than the low side, but it's 40, 35, 65, so it definitely can break down. But it's one kind of data set that we can use to kind of guess which way we think the market's going to go or which way we think the stock is going to go based on the direction it was going when it entered the wedge. I will say also, right now, aside from charts, the biggest factor on the market's mind is interest rates. Interest rates have really kind of gone up parabolic in a way over the past couple weeks. So we don't want to see interest rates go higher. We want, the market doesn't want that anyway. We want to see interest rates roll over. If that happens, the market probably moves higher. If rates go higher, the market likely struggles with that a little bit. But they've made a big move higher, so it's likely at a point where we see a bit of a downturn. But that is the biggest kind of issue on the market's mind right now, is which way rates go, and the market likely goes the other way. I will say that that the other smaller issues like the government shutdown and just like the seasonality are not as big of issues anymore. Specifically seasonality. Like I said, August and September tend to be by far the worst months of the year, and we're going into a strong part of the year, so that's working in our favor. People were worried about the government shutdown, or if the Speaker of the House gets ousted, is that going to lead to a government shutdown that's going to last for a long time? So we looked at the data, and actually, historically, the government shutdown is somewhat of a bullish, good indicator for the market. Like looking backwards, the time frame after a government shutdown tends to be good. So we don't see that as something to worry about right now. Even if we do get a shutdown, we historically we've done pretty well after that as happened. So other than that, we're just kind of trending along and waiting for some things to start happening. I would guess, it's October 5th today. Usually the middle of October is when things start to firm up and get stronger. So we may have another choppy week or so in the market where, again, it's kind of up and down. But our thoughts are that things firm up and start to move higher as the year finishes. So we'll do an update in a month, see how things are going, but this is where we're at today. So let us know if you have any questions or if you want to dig any deeper into any of these subjects, and we'll go from there, okay? Everyone take care.